From Thomas Elder Markets, we've got Matt Dalgleish joining us to talk about what's happening in livestock. How are you, Matt?
I'm good, Ricky, mate. Thanks for having me on.
Always good to hear what your views are, not only on what's happening locally, but on the export market as well. Look, with the foot and mouth disease concerns continue to loom large in this sector, but particularly so when we look at things like live exports. Let's look at the export side, and indeed it does look like the Meat and Livestock Australia's brand new or reinvigorated live export indicators had to hit the pause button.
That's right, yeah. So that was just released a few months back, but they've had to postpone any announcements on that just because the volumes have come off for June. So we actually saw, in live export sales for May, we saw the highest volumes we've seen all year, which is still below average, but they were creeping up bit by bit. But yes, June the numbers aren't out yet, but we have seen and heard of a lot of anecdotal reports of orders being postponed or cancelled over June. So we're expecting potentially about half of the orders that were scheduled have been postponed or cancelled, and that's going to take some of that steam out of the live export volumes for June when the numbers get released. And it's due to the Indonesian feedlots. Obviously, we've got foot and mouth disease and lumpy skin disease moving around Indonesia, and both of those have serious implications for cattle. And the feedlot operators in Indonesia just don't want to take expensive Australian cattle if they have to get them there and they get infected and they have to be put down.
Yeah, that's the sense we got talking to someone from the Riverina about Wagga, the suspicion they had about a little bit of turn-off when it came to, I guess, the buying activity. There was a concern even amongst Australian producers that maybe they didn't want to be sitting on high volumes in their own paddocks if we do have FMD come into the country.
Yeah, look, the price is coming off here as well. We have seen a bit of activity, like processors have started getting rolling. But they're still behind, I guess, in terms of schedule. So there has been a bit of a backlog at the processors for both sheep and cattle, and that's kind of flowed through to lower pricing. But you're right, there's a bit of nervousness there. Obviously, we haven't got any FMD or lumpy skin in Australia at present, but I think the nervousness around that has caused some people just to take a bit of a pause and maybe not chase those prices higher. And the other aspect too, I guess, Ricky, is the grain pricing continues to be high, and margins for feedlots and stuff will be pretty tight with those high grain prices. So, they've also kind of cooled their jets a little bit. So we've had a few of that, restocker activities cooled down. The feedlot buyers have cooled down. So we've seen pricing, both in sheep and lamb and cattle markets all soften a little bit over the last week or so.
In the last week or so, softening on the cattle front. If you're looking at the Eastern Young Cattle indicator, 12 cents off, but in 4 weeks, 112 cents. So we're off of the heady highs, knocking around 1,200 to almost close to getting below $10 a kilo.
That's right. Yeah, I think we did dip below it briefly a couple of days back, earlier this week. But we're back above $10 as of last night. Look, the market was very heated, and a lot of that was that restocker activity, of course. It's never nice for a producer to see a price decline, but when you look at the historic numbers, they're still, even at these levels, they're still pretty good historic pricing, and the market was running pretty red hot. So, having this kind of a decline is probably, what would Paul Keating say, it was the necessity we had to have to have that market just take a bit of steam out of it.
Well, on the lamb front, it does appear as well, year on year, we're about 100 cents lower than where we were at the same time last year. Well, what's happening there? I mean, we talk about the spring flush usually in a few months' time, but it does look like we've been on this downward trend for some time.
Yeah, look, part of that has been issues around processing in those southern areas with staff and COVID numbers and reduced capacity. So that's what I was saying before. It caused a bit of a backlog, and that's kind of flowed through to a bit lower pricing and unseasonally lower pricing. Normally, we see, the kind of the supply tightening up now, but we have had a pretty good season generally. So there were quite a few farmers that hung on to lands and fattened them a bit more. So we're getting kind of flow coming through, still through into early winter. Of number of head, they hadn't started to tighten up too much, and that was also kind of weighing on the market with the bigger numbers plus the reduced processing capacity. We normally do see for the sheep side and lamb side prices start to increase through May. That didn't occur because of those volumes, but I think as we head into kind of the latter part of winter, I think there is a chance we will find a bit of a base, and we might not get to the peaks we saw last year in that winter peak pricing, but we're probably likely to reach a base soon and start to climb a little bit as we get further into winter.
Well, Matt, there's plenty more detail you guys are providing at thomaseldermarkets.com.au. Thanks for that analysis today and have a great weekend.
Cheers, Ricky. Thanks, mate. Bye.